The bottom line is if there's no purchasing power left in the currency, and if that's official, you know it's worse than that, and they don't have the key tool, which are interest rates, to regulate the rate and speed of that inflation, and it requires confidence, and the only level of confidence left is the public's confidence. Once that is lost, you're in a hyperinflationary depression. And this is global. In the US, we are most likely to feel it worse than anybody else because we've been the world reserve currency. And so we've had privileges because they go, oh, the US won't default. Because after all, we can just print the money to repay that debt. Well, not if nobody is going to accept it. Stack gold, but gold is the primary currency metal. It does outperform during hyperinflationary events. Taking on debt can make you appear to be liquid, to have lots of money, to have lots of growth. And the problem is that the system is based on constantly compounding debt. And that's really the only tool that they have. But every single time they issue new money, the value of all the money that's out there goes down. That's the purchasing power. That's the inflation. So if they can control the inflation at that 2%, they rob you of your purchasing power, but you don't change your behavior. However, running higher than 2%, and especially where we were from all that money printing and that loose monetary policy, in other words, interest rates at zero and lots of free money, that makes it look like we have growth. All that was taking on more debt. So when you're looking at the US government, who issues the Treasury bond, which is the underpinning, the foundation of the global markets. So when you're looking at the deficits, all the central bank really has to regulate the rate and speed of inflation are interest rates. And interest rates have been anchored at 0% since 2009. And without exception, every single government that has attempted to raise rates since 2009, including the US government starting in 2016, it has been a big, fat fail. And unfortunately, the only answer is more debt. And who's buying that debt? But the global central banks are buying the debts of the governments. Doesn't make them particularly independent, as they want to say, nor does it make the economy look healthy. So yeah, what's the answer? The only tool they have is this. That's it. And we are already officially at 3 cents worth of purchasing power. Why isn't all this stimulus stimulating? Or better question is, who is it stimulating? Because it's not the public, for sure. That's your K-shaped recovery. That's your wealth and income inequality. If any of you out there are holding variable rate debt and you can get rid of that variable rate debt, you better do it now. This is probably your last best opportunity to do so. In fiat money products, stocks, bonds, ETFs, insurance policies, all of that garbage, those are just contracts. And contracts are subject to counterparty risk. What does the Bank for International Settlements tell us is the only financial asset that runs zero counterparty risk? Gold, right here. And by the way, when they need to get the confidence of the public back again, and they do those overnight revaluations, that's how they do it. They revalue something that has no intrinsic value against something that's 100% intrinsic value. And it's 100% intrinsic value because it's used in every single sector of the global economy, period.
The bottom line is if there's no purchasing power left in the currency, and if that's official, you know it's worse than that. The key tool that governments and central banks have to regulate the rate and speed of inflation is interest rates. It requires confidence, and the only level of confidence left is the public's confidence. Once that is lost, you're in a hyperinflationary depression. This situation is global, and in the US, we are likely to feel it worse than anyone else because we've been the world reserve currency. We've enjoyed certain privileges because other countries believed that the US would not default since we can always print money to repay our debt. However, this assumption falters if nobody accepts that printed money anymore. In this scenario, stacking gold becomes crucial. Gold is the primary currency metal and outperforms during hyperinflationary events. Taking on debt can make an economy appear to have lots of liquidity and growth, but the system is based on constantly compounding debt. The problem is that every time new money is issued, the value of the existing money decreases, leading to inflation. Central banks attempt to control inflation at around 2% to rob you of purchasing power without changing your behavior significantly. However, when inflation runs higher, especially due to excessive money printing and loose monetary policies like zero interest rates and lots of free money, it creates the illusion of growth. But it's really just more debt. The US government issues treasury bonds, which underpin the global markets. Since 2009, interest rates have been anchored at 0%, and every attempt by any government to raise rates has failed. The only answer seems to be more debt, but who is buying that debt? The global central banks are buying the debt of governments, which challenges their independence and the health of the economy. Currently, we are officially at 3 cents worth of purchasing power. The stimulus provided by governments doesn't seem to stimulate the public, but rather creates a K-shaped recovery, contributing to wealth and income inequality. If you have variable rate debt, now might be your last and best opportunity to eliminate it. Fiat money products such as stocks, bonds, ETFs, and insurance policies are all contracts subject to counterparty risk. The Bank for International Settlements tells us that the only financial asset with zero counterparty risk is gold. When confidence in the public's financial system is lost, governments may perform overnight revaluations to restore confidence by valuing something with no intrinsic value, fiat money, against something with 100% intrinsic value, gold. Gold holds intrinsic value because it is used in every sector of the global economy. Silver, while secondary to gold, also performs well during hyperinflationary events. Although the silver-gold gap narrows temporarily, the bottom line is that when the currency loses purchasing power, gold and silver retain their value. The US, having been the world reserve currency, might feel this transition most acutely. Gold, being the primary currency metal, will outperform in such scenarios. People often complain about premiums on gold and silver, but those premiums reflect the truth. There is a finite amount of gold and silver, but an infinite amount of fiat money. Stacking gold and silver is a prudent strategy, but so is ensuring that you have the essentials for living: food, water, energy, security, barterability, wealth preservation, community, and shelter. No one person can do it all, and governments often employ a divide-and-conquer strategy to control the population. Building a strong community, both locally and globally, is crucial. Sharing your resources and skills with others ensures mutual support and resilience. With the looming introduction of central bank digital currencies, CBDCs, it's crucial to retain control over your assets and not be entirely dependent on fiat money. Governments might sell CBDCs as a solution to inflation, but the underlying problems of fiat currency remain. The key to navigating this shift is community resilience. When people stand together, they become much harder to control. There's strength in numbers, and by building strong local and global communities, individuals can support each other in maintaining autonomy over their resources. The governments and central banks know that their policies have driven the economy to this brink. They understand that gold retains intrinsic value and have been quietly accumulating it. The general public, however, is often misled by official narratives. For instance, while central banks may not openly admit to increasing their gold reserves, actions speak louder than words. The continuous purchase of gold by central banks suggests a lack of confidence in fiat money and a preparation for a significant economic shift.
Silver is a secondary monetary metal. I've done studies on what happens to both of these during hyperinflationary events. And while you will see the silver gold gap narrow for a period, the bottom line is if there's no purchasing power left in the currency, and if that's official, you know it's worse than that. And they don't have the key tool, which are interest rates, to regulate the rate and speed of that inflation. And it requires confidence. And the only level of confidence left is the public's confidence. Once that is lost, you're in a hyperinflationary depression. And this is global. In the US, we are most likely to feel it worse than anybody else because we've been the world reserve currency. And so we've had privileges because they go, oh, the US won't default. Because after all, we can just print the money to repay that debt. Well, not if nobody is going to accept it. Stack gold, but gold is the primary currency metal. It does outperform during hyperinflationary events. And the premiums, people complain about the premiums are showing you the truth because there's a finite amount of this stuff. There's an infinite amount of this stuff. So keep stacking. And I have a mantra that I live by: food, water, energy, security, barterability, wealth preservation, community, and shelter. Because these are all the things that we need to sustain a reasonable standard of living. But frankly, one person can't do it all. And what has been the methodology of governments is divide and conquer. Because if we're not in community, it's so much easier to control us. So that is such a strong recommendation, is that you come together both locally and globally in community. You bring the gifts that you have been given: food, water, energy, security, barterability, wealth preservation, community, and shelter. You share them with the community so that when they try and control you via this, you can say, nope, because you got this, you got this, you got food, you got a community around you, and then they can't pull it off. I mean, they're going to bring the CBDCs out, and the way from what I've read, the way they're going to sell it to the world is that there will not be any more inflation. So you want to retain your control? Involve a community. And I really am working. I'll tell you, it is an absolutely not given that the government and central bankers can get away with it. If we stand together, there are more of us than there are of them. We are powerful. We are strong together.
It's essential to understand the dynamics of gold and silver in this context. Gold is not just a hedge against inflation, it's a hedge against economic instability and currency devaluation. The historical performance of gold during economic downturns and hyperinflationary periods shows its strength as a store of value. When fiat currencies lose value, gold remains a reliable asset, maintaining and even increasing in value. Silver, often referred to as poor man's gold, has its unique advantages. It has significant industrial demand, which supports its value. For instance, silver is crucial in the production of photovoltaic cells used in solar panels, which are in high demand as countries push for renewable energy. This industrial demand, combined with its monetary value, makes silver a compelling investment. During times of economic crisis, silver tends to outperform gold, providing higher returns due to its lower price point and higher volatility. The premiums on physical gold and silver reflect the true demand for these metals. While the spot price is manipulated by paper contracts in the futures market, the premiums show what people are willing to pay to hold the physical metal. These premiums are rising, indicating strong demand and limited supply. This trend underscores the importance of holding physical gold and silver rather than paper assets that claim to represent them. The current economic environment is unprecedented. We are witnessing massive money printing, low interest rates, and rising debt levels globally. These factors create a perfect storm for hyperinflation and currency devaluation. In such a scenario, tangible assets like gold and silver become indispensable. They provide a hedge against the devaluation of fiat currencies and offer a safe haven in times of economic uncertainty. Building a resilient community is equally important. No one can navigate these challenges alone. By coming together, sharing resources, and supporting each other, communities can withstand economic shocks better than isolated individuals. The concept of divide and conquer has been used by governments to control populations, but a united community can resist such tactics and maintain autonomy. The transition to central bank digital currencies, CBDCs, poses another challenge. While CBDCs may be marketed as solutions to inflation, they come with their own set of risks. They could lead to increased surveillance and control over individual finances. Maintaining control over your assets and ensuring access to basic necessities is crucial in this new digital landscape. Governments and central banks are aware of these challenges. They are quietly accumulating gold, signaling their lack of confidence in fiat currencies. This should be a wake-up call for the general public. While official narratives might downplay the risks, the actions of central banks speak louder. The increasing demand for gold and silver among central banks indicates a shift towards tangible assets. In addition to investing in gold and silver, it's important to focus on practical preparations. Ensure you have access to food, water, and energy. Build a community that can barter and support each other. These practical steps will enhance your resilience in the face of economic challenges. The historical performance of gold and silver during economic crises underscores their importance. During the Great Depression, world wars, and other periods of economic turmoil, gold and silver have maintained their value. They provide a hedge against the devaluation of fiat currencies and offer a safe haven in times of economic uncertainty. The future likely holds significant economic challenges. The signs of hyperinflation and currency devaluation are already visible. By preparing now, you can protect your wealth and ensure a reasonable standard of living during the transition. Diversify your investments, focus on tangible assets like gold and silver, and build strong community networks. For American and allied citizens, the transition from fiat currencies to tangible assets like gold and silver is more than just a financial strategy. It's a safeguard for your future. In times of economic uncertainty, these metals provide a hedge against inflation and currency devaluation. By investing in gold and silver, you protect your wealth from the erosion of purchasing power. Additionally, building a strong, supportive community ensures mutual aid and resilience. Remember, history shows that those who prepare and adapt are the ones who thrive in times of change. Take proactive steps now to secure your financial and personal well-being. Your actions today will determine your stability and prosperity in the future. Stay informed, stay prepared, and stay united. The power lies in your hands to create a secure future for yourself and your community. If you want to stay most up-to-date on the silver and gold markets, make sure to subscribe to my daily 5-minute silver and gold newsletter. It provides the latest expert insights, breaking news, market trends, and investment strategies, all in a concise format. Click the first link in the description to join thousands of others and enhance your investment knowledge right now. If you enjoyed this video, please give it a thumbs up and subscribe to my channel. Your support helps me stay motivated to bring more valuable content to you. See you in the next video.